tax planning is something that most people put off, don't understand, think they're going to have to pay taxes. And so they don't really worry about it because it's coming out of their paycheck. They don't see it. I mean, it's something that most people don't even think about.
And welcome into Financial Focus, brought to you by the best of the best in financial services, as named by the readers of the Lake City Reporter, the last 10 years straight, concurrent and running in the subject and topic of financial services. They are the team from GulfCoast Financial Services. Founder and CEO John Kuykendall here with us, helping us stay financially focused. And we always appreciate that, John. Talking a little bit about taxes. It is, after all, that time of year. But really, at this point in time, I mean, 2024 is in the rear view. It's old news. It's history. We're looking forward to do effective tax planning, right?
Yeah, if we're doing tax planning, we have to be looking ahead, Peter, to what we're going to happen, what we project is going to happen this year, and the tax laws and the tax changes that are in effect for this year. I mean, we can't, what happened last year, 2024 is over. There's nothing we can do other than make our IRA or Roth contribution left for 2024. So we need to look forward and do some planning for what we're going to do in 2025 and what we're going to end up paying in 2026.
Yeah.
So it's a great time to start, great time to think about it. You know, everybody procrastinates and think I have plenty of time and then I'm going to put my records in order. Everything's going to be in place. But then we wait and nothing happens.
Well, this is the official procrastinators holiday, right? If we are still talking about 2024, it is time. Let's unite. This is your day. This is your week. Whatever. We've got just a little bit of time left, but you have procrastinated. Congratulations! But let's get it done. Those tax returns for 2024. Let's get them in the rear view, but let's learn from them so that we can have tax smart, personalized, straightforward, long-term strategies moving forward for 2025 and all the years beyond. And I think that's what we'll talk about today, John, because that's your goal at GulfCoast Financial Services, is to plan ahead, not to react or look back too much at last year, keeping, when we're driving, I don't know if you've ever experienced this, but sometimes I get frustrated because I understand the driver in front of me is looking in the mirrors in the rear view more than they are looking ahead of them. And when you're moving forward, things come from ahead of you, and that's where you need to be focused. And the same with our financial planning is, like, we can look back and glance at those rear views, but we need to learn from them and be moving forward, right?
Well, that's right, Peter. I mean, tax planning is something that most people put off, don't understand, think they're going to have to pay taxes. And so they don't really worry about it because it's coming out of their paycheck. They don't see it. I mean, it's something that most people don't even think about until, January, February, when we start getting the information ready for last year. And we think, man, I wish I'd have done a better job. It's a way that we can save some money and, give the government what's their due, but at the same time, not pay any more than we have to.
Yeah. John, in the in the words of the notorious B.I.G., more money, more problems. The more income we have, or the more wealth we have accumulated, the costlier a mistake it is to overlook effective tax planning. We've got this system in place that the more we earn or the more we have, the more we pay in taxes. And therefore it becomes more important for us to do those effective tax planning strategies.
Well, that's right, Peter. I mean, we're on a progressive tax basis. And so the more we make, the more we pay. I think I read somewhere where 90% of all taxes paid are on the 10% of the highest wage earners. And so the rest of us are paying, but we need to be careful which bracket we're in. And if we make a mistake, it can affect the amount of money we have to pay that year because we could have earned too much. We could have taken too much out of our accounts, our retirement accounts, We could have postponed a bonus. There are a lot of things that we could do so that we could manage our taxes better, giving more money to charity, et cetera. But those are things that we don't think about, and we put it off too long, and then we don't have time to react.
But at your firm at GulfCoast Financial Services, you are staying financially focused for your clients. So you are thinking about those things like the decisions between traditional IRAs or Roths or conversions or creating income in retirement, which buckets to plan to build more in or pull from first, second, or last. And I know we're in the midst of what they have dubbed the great wealth transfer. So a lot of inherited retirement dollars being passed from generation to generation. How to effectively manage those without making the IRS the largest recipient of those inherited dollars, or just the dollars that we've saved, our income in the future. Those are the proactive, financially focused kind of strategies, the tax smart strategies that you are looking to help your clients identify.
Well, that's right, Peter. We look at that every day. We have software that we can input your taxes, and we can tell you what's going to happen if you draw out more money, what's going to happen if you have an inherited IRA and you have to take a distribution because that money has to be paid out over 10 years. When's the best time to take it? All those things come into play. Distributing IRAs to the next generation because of the Secure Act has become more and more difficult. And we need to make sure that we make the right decision on how we're going to take that money. And also, if I die and I'm taking a distribution, my heirs have to continue taking that required minimum distribution. And then at the end of the 10th year, the money has to be distributed. So how much do we take? How do we take it? What's it going to do to our taxes? What bracket is it going to put me in? Are all the things that we look at here with the tax software we use. And it's something that we really feel that a lot of people need to do is they need to plan. They need to plan on how they're going to take the money and how it's going to affect them. Just a little bit of a taking 5,000 or taking a little bit money more can throw you in the next bracket and make you pay more.
Yeah. I imagine, I mean, you're doing all of this planning, looking out and modeling and forecasting and executing on these strategies. I imagine, John, one of the biggest challenges with that is that the rules can change, right? We plan based on the rules as they are today, but Congress and the IRS, they can change those rules on us. As an example, I mean, you mentioned that Secure Act. That's just one of the recent times and examples of where they've changed the rules on us.
Well, Peter, that's right. That's one of the things that they have done with the Secure Act, and we got no notice of that. That was enacted in December of 2017 or 2020, and we didn't have any advance notice. We didn't have any way to plan for it. So you never know what's going to happen. I always think back to the Carter administration when they came up with notch Social Security and said that anybody born within a certain age bracket, 1920 to 1925, would get 75% of their Social Security, not 100%. So those people got 75%. They took a 25% haircut because the Carter administration believed that Social Security was going to run out of money. So they never got it back. When they passed away, they just never got that 25% back, and it wasn't given to their heirs. So, the government can change the rules on us at any time because they're our partners, but unfortunately, they control the board. So the board's going to vote and decide how we're going to distribute our money, how we're going to pay, what brackets can change. All kinds of things can change with taxes.
That Secure Act, it was one, like you said, that was popped on us very, very unexpectedly and passed in the week between Christmas and New Year's, and then went into effect the day after New Year's. And
Yeah.
by the way, largely bipartisan. They do agree on things up there in Washington from time to time. But again, an example of where things can change on us. we didn't see that one coming. One that we have been talking about, John, that we do see coming, the 2017 Tax Cuts and Jobs Act, as tax laws stand today, as we are having this discussion, set to expire at the end of this year. So sometimes we do get a little bit more foresight and possibly should plan around that.
Well, that's right. Now, the problem right now is that because uh, President Trump's been reelected, he's the one that enacted those tax changes.
Maybe he extends them.
So maybe we don't change,
Yeah. But
you
that's a
know,
maybe, right? And
maybe.
so
But
so
something's
shouldn't
going to change.
yeah.
Now, when we're going to be notified of that, I don't have a clue. But something is going to change. Brackets are going to change. The amount of money we're paying in is going to change. There are all kinds of changes, and we have to be ready for them. As you said, it's bipartisan. So in order to get enough votes, you got to make certain concessions and changes. And when we know those, when we know where you are today, then it's easy for us to pull that information up, look at those changes, and see how they're going to affect you tomorrow.
John, you or nor I nor anyone listening to this program individually controls the tax code.
Yeah.
But the tax code does give us the ability to save and invest our money under different sets of rules. There's options for us for the tax treatment of our dollars. You've talked about it as in terms of buckets. There are different buckets in which we can put our money that have different tax consequences. What do people need to be knowing or considering or thinking about when it comes to these different buckets, these different sets of rules that are provided for in the tax code?
Well, I mean, there are tax-free investments that we can make, municipal bonds that we can put our money into. We can look at harvesting losses. If I've got losses, I might want to go ahead and take those and write those off. Qualified charitable distributions is something we've really been preaching to anyone that's over age 70, because with the standard deduction now, very few people are itemizing anymore. Roth conversions and how it's going to affect us today, but not have to pay the taxes later. Doubling up, with spousal contributions, um, ongoing contributions that we're making to our 401ks, to our Roth 401, those kind of retirement plans, and making estimated payments so that we don't end up having to make a big payment at the end or to face the penalty that we have there. But life insurance is a way that we can build up some tax-free income that we can pull out, provided that we don't ever cash the policy in. There's just a lot of things that we can look at so that we can kind of put the whole picture together, Peter, and figure out what tax bracket we're going to be in, how that's going to affect us ongoing, not only this year, but ongoing forever.
Learning from last year to execute this year and have the advantage for years to come with all of those different strategies that you mentioned, John. Is that why you believe it is so important and such an advantage to coordinate the financial and investment management and the tax planning and preparation review?
Peter, I really think that most people don't understand the tax code. They don't understand what tax bracket they're in. They don't understand how taking a little bit of money extra money out of their IRA or their 401k is going to affect them tax wise. And so I really feel like that this is one of the most overlooked things that we can do. We can be proactive and we can do a better job in paying taxes, paying what a fair share is, but not paying more than we need. And I think this is one of the problems that we have that we have to continue to work with. We have to continue to educate. We have to continue to strive. I always go back, Peter, and think about the lady that wanted to put the plants in her yard. And so she came in and said, look, I need 4,000 out of my IRA. We looked, no, it was 10,000. We looked, and for her to pull that $10,000 of extra money out to landscape her lawn was going to cost her $4,000 more in taxes, 40%. So what we did was we took part of it this year and part of it next year so that we could spread it out. Those are the kind of things that we have to do. We have to learn what it's going to do to affect me if I take more money out of my IRA.
And then through that, John, you can talk about creating income in an efficient manner, controlling the tax liability, understand the pros, the cons, the costs of utilizing IRAs versus Roth, doing things like Roth conversions. All of those are part of the planning that goes on there at Gulf Coast Financial Services that I think makes you distinct and differentiates you from just having access to the market, just a collection of mutual funds, and here's where to invest your money. Nothing wrong with that. In fact, that is an important and valuable tool to have access to the market. But I don't think that truly constitutes planning, and the planning that people need and deserve to have to make the most of those options for their financial future. And I think that's why you do such a good job in keeping us financially focused.
Peter, we try. I mean, like I said, the government is your partner. They own a piece of your 401k, a piece of your retirement account. We don't want to make it any more difficult than we have to, but at the same time, we want to understand what we're doing, how we're doing it, and how I can do it better. And the Secure Act is going to create a financial burden somewhere down the road for the grandchildren or the children. And so how are you going to handle that? Those are all the things we look at, Peter, and all the things you have to look at in order to really do tax planning, something I'm very passionate about.
Well, we work very hard to build up enough for a realistically comfortable retirement over a lifetime. Taxes are one of our largest expenses. So if you want to learn how to retire comfortably, or you want to identify the strategies that can help you better control and bring down the cost of taxes and how they eat away at your savings and investments, that's what the written financially focused income plan is about. You can get that at Gulf Coast Financial Services. John Kuykendall and the team there, the generations of planning, the family at Gulf Coast Financial Services, and the sister company of Gulf Coast Tax Advantage do a great job in bringing all of those pieces together and putting a plan personalized, specific for you, for long-term, diversified, personalized strategies that reflect your financial goals. If you would like that, there is no cost for putting the financially focused plan together for you. Just give a call and start that conversation. 386-755-9018, 386-755-9018. And John, you always like to mention the book, Quitting is for Winners, Retirement is Not for Wimps. That is also available there at Gulf Coast Financial Services.
Well, that's right, Peter. And retirement is harder than we thought. There are more traps. There are more potholes that we have to navigate. And so why not make it easy on yourself and at least learn in advance some of the things that you need to be looking for?
Yep, it's planning, ladies and gentlemen, planning ahead, looking into the future and making sure that you are prepared for it. And that is what they do there at Gulf Coast Financial Services. Give John Kuykendall and the team a call, 386-755-9018, 386-755-9018. As always, John, a pleasure, and we do appreciate you looking ahead for us and keeping us financially focused.
Thank you, Peter. Great to be here this week. See you next.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.